Hey, what's going on, guys? I hope you guys are having a good day. I'm Dr. Boyce Watkins from Your Black World and the Black Financial Channel. I wanted to hop in to talk about something that many of you are probably familiar with. If you're on the Black Financial Channel, you probably know about an app called Robinhood. And Robinhood is a great app. I like to use it. It's a lot of fun. They do have some issues, some minor issues when it comes to glitches and sort of breaking down at critical times. They've done that before, but for the most part, it's pretty stable, and I've used the app pretty consistently. But one of the things I wanted to bring to your attention, and this just was on my brain this morning as I woke up, so I thought I would share this with you guys, is that there are some hidden risks in Robinhood, and also just with what Robinhood incentivizes you to do. So let me kind of break down and explain to you why Robinhood has done so well. Robinhood has done well for a few reasons. One, they really push the issue of fractional trades, which allow you to buy shares in any company, on a fractional basis without actually having to, own an entire share of stock. I think that was a game changer. I think that's a big deal. So I don't want you to ever say, I can't afford to buy a company stock, because that's just not true. Well, most of the companies trade on fractional shares, so you can buy $2 worth, and still get the same upside, right? And that's very important that you invest, because the economy is what you call, experts believe that we're going to have what you call a K-shaped recovery. A K-shaped recovery means that it's going to be jagged, like the letter K. Like the letter K gets kind of, like this, right? So jagged meaning that, one, it's going to be skewed toward the rich and toward those who are investors, right? So even if you're not rich, you want to do what rich people do. Rich people are investing in the stock market. The stock market has done this, while the unemployment numbers have done that. So those who are leaning on just a job to make all their money are going to unfortunately go south, and those who are investing are going to go north. So that's why investing in the stock market is extremely important, and being consistent with it is very important. Number two, not every industry is going to be equally is going to benefit equally from the recovery. Some industries are going to do extremely well, some are not. You had what they call the FANG stocks and the tech stocks and the stay-at-home companies that had just exploded. Everything from Tesla to Apple, Amazon, Facebook, Netflix, and Google, and Microsoft, that just went through the roof. But then you had a lot of stocks that just stay flat, stay still. They aren't moving because the economy is not really moving. The economy right now, to be honest with you, is garbage. The economy is garbage. It's not ready for anything good. Hopefully, when we open up and there's a vaccine, we'll be fine. But until there's a vaccine and we open up, it's going to be a mess. So so investing in the stock market is really important. Robinhood serves that great purpose of getting more people involved in investing, democratizing it, so to speak. I think that's a wonderful thing. The other game changer that Robinhood introduced was trading with no transaction costs. Before, you'd have to pay $10, $5, $15, whatever, to make a trade, right? Now, Robinhood says you don't have to pay anything. And so what happened is all the other brokers, Charles Schwab and Fidelity and all of them were like, whoa, we got to catch up. So they all started introducing no-cost trades, which is great, right? It's great for the world. Hey, trading is free. Woo! Okay, well, then you got to ask your question. How does Robinhood make their money? Well, one of the ways that they make their money, the bulk of their money, is through options trading. Options trading. That is not free. Basically, that also provides an incentive for them to encourage you to want to trade in options. So here's the dynamic that I'm seeing when it comes to Robinhood apps, or the Robinhood app is, they're making their money, a lot of their money, through options trading. They're also pulling in a lot of young people, a lot of millennials and sub-millennials. Whatever the generation is after the millennials, I don't know if that's Generation Z, or I'm getting old, so maybe you start the alphabet all over again. Maybe there's Generation A now. I have no idea. But whatever the generation is after the millennials, because now the millennials are old, they're in their 30s anyway, that generation is being sucked in. And here's the deal. When the pandemic occurred, Robinhood gained 3 million new traders, which is massive growth for that company. I think they had 10 million before. They went up to 13 million during the pandemic, right? Right when, nobody had any money and the economy was allegedly dead, Robinhood blasted off and just made all this, you got all these extra traders, and they're making all this money. Well, they're bringing in a ton of people. A lot of them are young. They love the easy interface. They love the free trading. And it's great. I agree with that. I think investing is really literally a game changer for anybody that does it consistently. And a lot of them are engaged in what we as finance PhDs refer to as risk-seeking behavior, right? Because when you're young, you're wild and crazy. You don't give a damn. You're not scared of anything. You'll go hard in the paint, and that's fine. But unfortunately, that's not investing anymore. It can become gambling. Trading is almost like gambling as opposed to investing. And the best way to gamble, if you're looking for the high of gambling, and psychologists will explain that gambling affects your brain the way cocaine affects your brain. It literally is the same as a drug. So you have a lot of drug addicts that love to gamble, that are jumping on the Robinhood app and engaging in all kinds of trading, right? Crazy trading, so they can make a fast dollar. Right now, I'm not against anybody making a fast dollar. If you're making money, I hope you keep making money forever. I am not judging anybody's method of engaging in whatever they're trying to do to make money. I think that's totally fine. I have no judgment whatsoever. But I just want to describe. I like for you to know what it is, right? As an educator, my goal is to just make sure you know what it is, so that you don't think that it is what it is not. Right? It is what it is, and it ain't what it ain't. It is what it is, and it ain't what it ain't. So I want to make sure you know what it is and you know what it ain't. Just like when we talked about blessing looms versus susus. I don't care if you do either one. It's up to you. That's your job to make the decision. I just want to make sure you know what it is and what it ain't. A lot of people were calling blessing looms susus. No, susus are a traditional savings vehicle that involves community activity, right? That's nice and safe and secure. Investing looms are technically defined by the law as pyramid schemes. That's illegal. If the feds find out about your loom, they can actually go and arrest people for that. Just in case you want to know that. Now, so same thing is true when it comes to investing versus trading. Investing is where you plant the seed, you let it grow. You're looking to make money long term. Trading is where you're moving fast. You're trying to make a fast dollar, fast buck, fast buck, fast buck. Good. That's fine, but investing is not trading. Trading is not investing. Investing involves a little bit of trading, but continuously trading is not always the same as investing. Okay, and the other thing too is that investing gives you that longer money. Trading is where you're aiming for the short money. Investing gives you the safe money. Trading brings in the risky money. Okay, so just make sure you know the difference. Now let's go back to Robinhood so we can break this down. And if you're watching anywhere online, please hit the thumbs up button, share, and subscribe button. And you may want to subscribe to the Black Financial Channel, theblackfinancialchannel.com, and follow the Black Financial Channel on Instagram. We want to make sure you learn how to invest the right way. So going back to Robinhood, here's the issue with Robinhood that I really want you to be aware of. Not only is Robinhood kind of becoming the Wild Wild West, right? And it's really throwing off what they call the graybeards in investing. The graybeards are the old guys that have gray in their beard, who've been investing for 40 years, who trade based on fundamentals. They learn from Warren Buffett, who learned from Graham and Dodd, who wrote the book in 1933 about how to invest, value investing, right? That's how they think. So they're looking at the stock market and is doing these crazy things. It's going up and down and shooting all over the place, and they're like, why is this crappy company worth so much money? It was Hertz. I think it was Hertz. It was like going into bankruptcy, and the Hertz stock is trading at these high prices, and people are like, what the heck is going on, right? And so the graybeards are really confused right now, and I believe that the graybeards are confused because that Generation Z is coming in, and they're creating a lot of volatility in the markets. But so that's one interesting side effect, which actually I think if you guys are interested in the Black Stock Market Program, theblackstockmarketprogram.com, I actually break down how you can actually make money from wild, crazy traders. Like there are ways you can actually benefit from that, right? No matter what the situation is, just know when we talk about investing, investing involves what I tell my students, we call it OPP. OPP stands for opportunity, patience, and perspective. Opportunity, patience, and perspective. That means that you can spot opportunities, you have patience, more patience than your adversary, and you have a bigger perspective, a longer term perspective. And so OPP means that when people are in there going wild and crazy, you can position yourself where you can make money from their wild and crazy behavior. It's like, for example, during the whatever they called it, the California gold rush. Most people didn't make big money, their biggest money, by digging for gold and taking the risk of finding gold. Most people made money by selling items and equipment to the people that were going out to go dig for gold. They're like, oh, you want to go dig for gold? Here, we sell picks. Here, you want to dig for gold? We got shovels in the back. You want to buy a shovel, right? Or you want to dig for gold? Okay, well, when you get back from digging for gold, you probably gonna need something to eat. So I have a little restaurant over here, right? Because that was that surefire money. That was that slow money, but it was consistent money, right? So there are some people who took the consistent money and some people who took the risky money. Well, I think the market kind of operates in the same way. Right now in the stock market, there are the risk takers, and that's fine. To be a risk taker is fine. To try to buy options and everything else, because that's what is being incentivized. Robinhood makes a ton of money getting people to buy options. A lot of these young people are coming in. They're looking for the fast money. Many of them were sports gamblers who are now using the stock market as their new gambling venue, and they're buying these options and they're taking these chances. A lot of them are going to lose a bunch of their money, but then some of them are going to make money. You're going to hear some get-rich-quick stories, but you're going to also have a lot of stories that will never be told to you about people that went in and just lost a ton. And so my belief is that when it comes to investing, you can either be the gambler or you can be the house, right? You can either be the gambler or you can be the house. There are people that position themselves in financial markets as the house. The market maker, for example, and I won't go into what a market maker is, but the market maker basically facilitates the trades. They position themselves as the house. They're like, I don't care what gambling you want to do. I just know I'm a buy low, sell high, which has been the easiest way to make money since the beginning of time. I buy from you over here at this price, and I sell to you at that price. So I'm always making money as the middleman. There are also people that, for example, will sell options as opposed to buy options, right? Again, they're playing the house. They're like, look, you can gamble if you want to. Here, I'll sell you something that will help you gamble, right? I'll sell you the picks and the shovels. You can go dig for gold if you want to. So ultimately, it comes down to sort of how you want to position yourself in this market. And I encourage you to pay attention to the dynamics. I encourage you to also understand this. There are a lot of experts, myself included, who believe that at some point there will be a great awakening where a lot of the risk takers are going to realize that nothing in life ain't free. That basically there is a point where the chickens do come home to roost, and it might come in the form of a market collapse. Right now, for example, Tesla stock is really plummeting. I don't know how far that's going to go. I think it could go for a while, just because a lot of people are not just speculating on this stock, but they're also buying on margin, and they're buying all these options. And I just really think that there are various mechanisms that can cause a continued collapse of this stock, almost like a fat person falling down, or a piano, better yet, a piano that falls through the ceiling, and as it hits each floor, it's going faster and faster, right? It's gaining momentum as it's falling to the ground. So I wonder how long Tesla stock is going to continue to fall, because Tesla is one of the stocks that it seems to attract the greatest amount of speculation, because Elon Musk is such a cool dude and everybody loves him. Everybody's excited about Tesla stock. It's always in the media. They just had the stock split, so the speculation is pretty high with Tesla stock, and for various reasons it causes the prices of the stock options to go up, because everybody wants to buy options on Tesla stock. Everybody wants to speculate on that stock. Well, I know a lot of people who've made a ton of money by selling the options on Tesla stock as opposed to buying them. So anyway, that's all I want to say. I just want to share that with you guys, that when it comes to this market, there's a lot of little hidden things going on. And one of the biggest risks out here that I've seen is that a lot of people are trading on really bad information. When the market tends to do really well, it creates what one of my dissertation committee members, David Hirschleifer, referred to as the herding effect, or overconfidence. And you can get a lot of people that become extremely overconfident because the market is doing well, and they're like, yeah, I'm an expert, I'm making money, right? Well, you know what? Everybody's making money. A dog with a mental disability could make money in this market. It is raining money in this stock market. So everybody's making money. So a lot of the people that come in and say, hey, I'm going to teach you how to invest. I know how to invest because I'm an expert. I've been making money. They probably don't even know how a stock is valued. They don't even know where the price comes from. Like they don't know anything about the equations necessary to create a stock price. This comes from mathematical formulas. There's a process. There are ways various variables interact with each other to change a stock price or change the price of an option, the way risk moves throughout the economy, that you want to understand. So I encourage you, if you're really thinking about, again, if you're looking for the fast money, then it's easy. Just go gamble. Just go roll the dice and take your chances. But if you want to understand how to make that slow money, long money, sturdy money, consistent money, invest safely, that's what I tend to want to talk about, because I don't want you to jump out here and think it is something that it isn't. I don't want you to think that a one night stand is the same as a healthy marriage. It ain't the same thing. A one night stand, maybe that's fun for some people, but also one night stands, while they're fun, they can also come with unwanted pregnancies and STDs, right? So as long as you know what it is, then you should make the best decision for yourself. And then maybe we can also talk about the work that it takes to create a healthy marriage so you can actually get something that's more sustainable. So I want you to form a healthy marriage with investing. I'd like for you to build generational wealth. I want to see you invest in a way that's safe and secure and profitable at the same time. And that's what we do in the Black Business School. So if you haven't taken a look at our stock market investing program, the first month costs $1. It's just $1, so feel free to give it a try. You can go to theblackstockmarketprogram.com, THE, that's theblackstockmarketprogram.com. Now, if you want to also learn about options investing, we talk about options investing on a regular basis. We have a great program in that. So you can go to blackoptionsinvesting.com, blackoptionsinvesting, ING, blackoptionsinvesting.com. So feel free to check that out also. So thank you guys for listening. It was wonderful talking to you. Hit the thumbs up button, and I will see you soon. Take care. Bye-bye.